Want to know how you can take advantage of tax deductions for your office? Stick around and watch how we depreciate your office fit out. Hi everyone, Tuan Duong, founder of Tax, here for another video designed to help you become a better property investor. Similar to residential properties, commercial property depreciation can also be claimed. What's interesting about investing in commercial property is that there are substantial tax benefits for commercial property owners and tenants. So even if you don't own the property, if you're running your own business from a commercial space, there are opportunities for tax benefits you can take advantage of through the property. So how does a commercial property owner or tenant claim deductions for office fit-outs? Stick around because today I'm going to cover it all. But before I start, I want you to be clear that this video is for informational purposes only. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. Commercial property depreciation rules are a little bit different to residential properties, mainly because owners can claim depreciation for the building structure and any assets they own within their property. But if the tenant installs office equipment during a fit-out, they are entitled to claim tax depreciation for those assets. So, if you're the legal owner of the office equipment that you installed during the fit-out, you'll be entitled to claim depreciation under ATO depreciation rules. For example, if we look at the overall features of this office space, the tenant would have undergone a whole fit-out design process to get the space ready for their team. Usually, the commercial building owner will leave the space bare and empty for the tenant to transform the space into whatever they need. But you can expect that they'll provide the basics such as flooring, ceilings, air conditioning, lighting, and even common amenities. In most cases, the tenant will then be responsible for installing workstations, kitchenettes, partitioned offices, meeting rooms, breakout areas, data, power, telephones, and furniture. So let's have a look at what's around that you can claim on within an office fit-out. If we look at this partitioning, we've opted for glass partitions because it displays a contemporary appearance and provides natural light. These glass partitions are permanently fixed and will remain if we vacate the premises. So we can claim this as capital works deductions. That means that it will depreciate over 40 years at a rate of 2.5% per year. Moving on to the office furniture. Here we have a 6-person office workstation with cubicle dividers. It's a freestanding asset that the tenant installed when the lease commenced. Because it's freestanding and can easily be removed if we vacate the premises, they are plant and equipment assets. According to the ATO rules, these items are eligible to be depreciated at various rates over their effective lives. The workstation has an effective life of 20 years and typically costs around $1,600 each. So you can claim a deduction for the $1,600 over its 20-year lifespan. Now, you'll see each workperson's workstation has a telephone handset, which has an effective life of 10 years and can cost around $300 each. We've also installed a basic fire alarm system. This system has alarm bells that have an effective life of 12 years and smoke, heat, and CO2 detectors with an effective life of 20 years. A basic alarm system can cost around $70 per square meter. Next up, we have the carpets. Carpets are subject to a fair amount of wear and tear, so they have an effective life of 8 years and cost around $30 per square meter. We also have a kitchenette which we installed during the fit-out. The cabinets, benches, sinks, splashback, kickboards, electrical fittings, door and handles are all eligible for the capital works deduction at a rate of 2.5%. Plus, there are various plant equipment assets that we can claim depreciation deductions on, like this fridge, microwave, and coffee machine. They'll also depreciate accordingly to their effective life. But some of these items like the cutlery and crockery will be eligible to be categorized into the low value pool in the first year that you claim, which means you can boost your deductions. A low value pool is for equipment items that cost less than $1,000. Low value pool rules allow you to write these assets off much faster. So as you can see, as an owner or a tenant, by maximizing your tax depreciation deductions on all these assets, you could definitely boost your cash flow. But you're going to need to get your hands on a tax depreciation schedule because claiming these tax deductible expenses involves identifying the value of a property and all its fixtures and fittings. The Tax team has helped thousands of commercial property investors and tenants maximize their deductions and save thousands of dollars through the power of investment property tax depreciation schedules. We offer free, immediate, and accurate over-the-phone estimates so that you can decide if ordering a commercial tax depreciation schedule is worth your while. Then, if you're ready to commit, we'll have the report sent to you and your accountant within 5 to 10 business days. If you have any questions about commercial property fit-outs, please leave them in the comments section below. Otherwise, make sure check out our YouTube channel to subscribe for more property investment tips. And make sure you click on the bell icon so that you get notified on the next video. I'm Tuan Duong from Tax. I'll see you next time.